Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Chicago wheat and corn.
Chicago wheat. I'm sorry. I keep hoping this may not take as long as earlier commentaries, but please be prepared as this may take some time. Firstly, I wish to set out the market's overall picture. The reason this may take some time is there is no simple description here for what is a very complex situation. The break higher in June and the larger break higher in July, based on the neckline of the small but surprisingly significant October to November 2020 neckline from a head and shoulders top, and highlighted in purple on my daily chart. These breaks higher closed over a number of important resistances, notably the 50% absolute Fibonacci line at 682. The move up over the 50% absolute Fibonacci line was intrinsically important, but it was also important in another sense, as it was a gateway to the congestion band from March and April between 682 to 721, within which sits the January 2021 high at 693 and the old October 2013 high at 721. Punching through these resistances, the market utilized the medium moving average, currently 651, as a base for a push higher still, up through the upper congestion band dating from December last year through to February this year, between about the March 2014 high at 725 up to a lesser Fibonacci line at 799 and containing within it the January 2022 low at 739 and the May 2014 high at 744. The market made it up into this congestion band, pushing up over the March 2014 high and even over the one piece of resistance coming down at that time that any market would usually have trouble in overcoming. The slowly declining long moving average, currently 689. However, back in June, prices did not close over it, and in July, prices did not stabilize over it. Okay, so this is where I reprise my discussion point from 8 weeks ago, not only to discuss it as a point, but to include it into this week's action. Okay, so I said 8 weeks ago, and I quote, "For a few weeks now, I have been talking here about a bear channel. I even finessed the point further by specifically highlighting a topside level. This was what I said, and I quote, thus a primary target X would be in the 770 area, only a little above where we have reached, but the secondary target X1 will be a lot higher up in the A55 area. And there is quite some congestion overhead, and one important downtrend, the March 22 to date downtrend, currently at 745. This is the one based on the ultimate high of this market. But we'll have to see if the market can achieve target X first," end of quote. Well, as you can see on the daily chart, target X at 770 was achieved, and the market immediately turned and fell away, moving back below all the supports that had earlier been resistances, and now once again became resistances. The fall reached the significant neckline extension, currently at 652 of the small October 2020 to November 2020 head and shoulders top, which is highlighted in purple on my daily chart. This neckline has a fairly wide congestion area clustered around it, formed from late April to mid-July, between about 609 to 679. This congestion had lasted for about 2 weeks at the start of July, supplying the market with enough ammunition for a try higher. This time there was no such support, and prices dropped down through it, briefly halting ahead of the July 2021 low at 609, before pushing down through it, as well as the March 2021 low at 592, only finally halting with a changeover gap just ahead of the November 2020 low. Looking back, target X in the 770 area is done, and it seems prudent with the subsequent action to retire the secondary harder to reach target X1 in the 855 area. I will do so after this commentary. All these ups and down actions have generated some newer potential patterns. The first I'd like to discuss is an unusual one. It's one that immediately springs to mind but looks in the wrong place, and I've talked about this 3 weeks ago. It is to see the whole of the late May to date action as a possible double top, with a neckline at the same purple extension of the neckline of the small but influential October to November 2020 Head and Shoulders top, and say that's currently at 652. If this is to be the case, then the primary target for the move down has already been achieved at 586, though a secondary hard to reach target X2 is still down at the 502 zone. I had also, back 3 weeks ago, suggested the idea of a possible rising three valleys pattern, but this is no longer viable. Then there is still in my mind the old descending scallop idea, which might have some merit, but it would be hard to verify right now. Finally, and this is a big, way out there pattern idea that only came about because I looked at the longer term charts for Chicago wheat. There is the idea of a very tall head and shoulders top, formed over 2022 and now pushing lower. For the moment, I will just lodge this idea in your mind, as it has some astonishing potential targets below. A primary target would be down below my current daily chart in the 426 zone, with a secondary, much harder to reach target down in the 123 zone. Please note these are multi-year targets, real long-term ones, but that doesn't take away from their stark impact should we see this head and shoulders top pattern acted out to its final conclusion. Chicago corn. The key pattern in recent times has been something I almost mentioned in passing last time, but has seemingly become quite important. I said 3 weeks ago, and I quote, "I looked last week at the action since mid-May to possibly be a descending wedge pattern." That's currently 456 to 476. This pattern is not complete yet, and it has a girth that I'm not too comfortable with given its duration, but it also stands out. So for a second week, watch to see what happens at this 490 to 498 congestion, end of quote. Now this pattern still looks valid, though not the best looking example of such a pattern. Now my issue with this is twofold. Firstly, the market has not pushed up and out of this pattern, not directly. There has not been a direct move higher, more a wandering out of the pattern sideways since roughly mid-August. Not the most inspiring of such moves or motivations, but it still nevertheless has happened, and I will shortly lay out some potentials on the top side for such a pattern. The second point is to define by what I mean by the, and I quote, 490 to 498 congestion, end of quote. This is a congestion, including within it the 2021 low of 498, that was supportive back in late May, then again despite being breached back in early to middle July, and more recently since mid-August has been acting as resistance. It is currently being tested, and it is also being reinforced by the flatlining short-medium moving average, currently at 499, that's just above. I note that further up and descending rapidly, we have the medium moving average, currently at 519. Okay, so assuming that this break up and out of the descending wedge pattern is a genuine one and not a false break, which to be honest still has a question mark over it, then a primary topside target X for this pattern is up in the 591 area, whilst the secondary harder to reach target X1 for this pattern is up in the 654 area. Of course, this all depends on the move up being a genuine move and not a false break, which I am still not sure about. However, if it turns out to be a true break higher, then we can see prices challenging a load of overhead congestions at 525 to 528, at 539, and a significant congestion band between 548 to 567, containing the 50% Fibonacci line of 549, as well as coming in from above the declining long moving average, currently 582. I wish I was a little more enthusiastic about how the market pushed out of the descending wedge pattern, but I can't be.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.